COSM facing that downside we were looking at during the weekend. Let's go ahead and find out exactly what could happen for price action in the coming sessions. Let's begin. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a COSM, technicals, raw price action, and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's dive right into the charts. Okay, so we are looking at COSM on the 4-hour chart here, and we're gonna start the short-term time frame analysis with the ARC-Series Crypstex indicators. Okay, so we're going to be looking at first the ARC DBSI indicator, which is an indicator comprised of a statistical metric, and that metric actually takes account of every single candle, red or green, throughout the entire trading history, so that we can get a percentage value right up here. And the percentage value can be looked at as a score. So right now you can see that on the 4-hour chart, the bears are in control with a 69% versus bulls at 31%. Okay, so we also did notice in the prior videos that we had the 200-day simple moving average right down here that we could potentially use as an area for a bounce. This is a hammer candle printed at the bottom of a trend, which is usually bullish. Okay, but please notice that DBSI has actually printed a sell signal right at this candle here. So what could be happening? The DBSI is noticing a downside. So let's go ahead and try to verify that with maybe another ARC series indicator. So let's go ahead and just block the visibility from DBSI and load armor. So this is ARC armor. And actually, you know what? Let me get rid of the SMAs now. And okay, so let's see what it's doing. Okay, so armor and actually, you know what, armor is better usually in the shorter term time frame. So we're usually looking at these in about an hourly chart. Okay, so as you can see, armor still has a short signal here printed on December 19th, which is today at about 10 a.m. Okay, so this is still honoring a downside continuation. Even though we got these two little green candles at the end of the day, it's still suggesting a continuation to the downside. Now, the ARC armor is comprised of several exponential moving averages. They're placed very close in proximity so that we can gauge a type of directional wave or a wave of motion. Okay, so in that wave of motion, we're able to get some buy and sell signals. Okay, just like the DBSI does, but this is in a maybe a lesser aggressive manner. So we get a short signal here, it goes down. We get a long signal, it goes up. Short, we go down. You get a long signal here, it goes all the way up there, and now we get a short signal here. Okay, so this signal is still being honored. So we have to practice some other metrics just in case, so that we can go ahead and validate the ARC series indicators as well. So this is a very good thing that it's telling us that downside is on its way. So let's go ahead and move on to the next chart and see what we have. Okay, so this is the broadening descending wedge that we have been looking at for quite some time, and this is essentially the guide that we're using for price action. Okay, so in this wedge, we can actually see that the market close, the actual market close, was at about $7.59. Okay, this is not including after hours trading. So if you actually go to the 12-hour on TradingView, you'll actually see the after hours touching our little gap here that we noticed from a few days ago. So we are using this tiny little gap as a form of support right now. This is now again a very bullish hammer, but to tell you the very truth, I don't trust this hammer just as much. And why? Because in another time frame, we also caught a tiny little gap right down here too. Okay, so these gaps are very much pertinent, and we do have to use them as a future type of play. Okay, so even though they've already been covered, there are times to where we come back, hence on the 12-hour chart, there are times to when we come back and we use them as a form of support before a continuation onto the upside. In this case, it looks like price action may actually want to come back and test this one right over here. Please remember this target that's at the top is at about $4.79, $4.80. Okay, please remember that target as it's very pertinent. To particularly this. Okay, so we are looking at a range, a demand zone down here. It is pretty wide. So we're looking at about a bottom of $2.80 and the top being here, what do you know, $4.80. Okay, so we are potentially gonna make our way down to make a support touch at that $4.80 zone. And this looking at price action the way it's moving right now, the volume has decreased significantly. So this can actually take another day or two for us to actually make our way all the way down here and validate this as a firm of support before continuing on to the upside. Okay, so let's go ahead and now move on to the statistical side of the analysis. So now statistics are showing a very good number. I know there was a large conversion in mathematics here, but we can just go over the very basics for the new listeners and the new viewers. Okay, so volatility you're looking at right here is represented by this indicator BBWP. Volatility is direction neutral. We use stochastic momentum so that we can gauge a bias for that direction. Okay, so stochastic momentum does have a backtest of about 75 to about 91%, and it's done by hand by me, and I've done it throughout several tickers. So in guessing the asset's direction, 75 to 91% is actually not bad. So we just have to we have to consider it and factor it into our probabilities, right? So in this case, you can actually see that stochastic momentum is still pivoted straight to the upside, is still suggesting a continuation. Okay, so this is particularly to the daily chart. Okay, another thing that we do have to notice, which is a very good thing, is that volatility is definitely absolutely in critical. Okay, so what I consider to be critical could be anything at or above the 90% trend line here, the red line. Okay, so as long as we are above this area, we're in critical volatility. So judging by raw price action, tomorrow Tuesday can still look a little bearish, okay, but that's not gonna affect too much of the volatility versus momentum profile backtest. Okay, so the backtest actually came back with some interesting metrics before the reverse split was actually completed, and this is the date right here for the split of the 125 ratio. Okay, so we're not going to go over exactly every single detail, but to put it in short, after a conversion from the 125 split ratio, I actually came up to an averaged upside thrust of about 100.378% to the upside. Okay, and that upside accuracy is still accurate. We're looking at 82.85% in guessing the asset's direction to the upside, in particular to the momentum versus volatility profile. Okay, so out of those 35 total iterations that I took as a backtest throughout the entire trading history of the COSM asset, 29 of those were guessed correctly to the upside. Very good deal. Very good deal. Another thing is to notice is that we do have an average duration of about 13.25 days. So that's upon the firing of the signal, it can't take that long. And the firing of the signal has thus been alive for about what? A day or two, maybe at the most. So we still have some time to realize this to the upside. We do have to practice some patience here. Pardon me. Okay, so let's go ahead and move on to the last part of the chart. So this is going to be, actually, you know what? Let me open up a single pane first so that we can look at the 12-hour. Okay, so a few iterations ago, we actually did notice that we had, let me just get rid of these things. We did notice that we had several drives of bearish divergence, and two of those drives were actually hidden bearish divergence, and the other drives were regular bearish divergences. Okay, and we do have one phantom drive of regular bearish divergence. Usually why it's phantom is because it has to cross price action in order for it to get from point A to point B. Okay, so divergences are the opposition of price action versus momentum, and momentum in this instance is represented by RSI, Relative Strength Index. So for the new viewers, the pink line represents a 14-day moving average. The purple line represents a signal line. Sorry, I'm losing my voice. Okay, so now particular to the 12-hour time frame, you can actually see that the downside pivot is starting to slow down just a little bit, and it's potentially because of what we've been mentioning. We could actually use the moving average as a form of support before continuing on to the upside. Okay, so it's looking okay, but we do need a type of pivot, in order for us to confirm drives of bullish divergence. Okay, but at the moment, the bearish divergence drives are still at play and appear to still have a continuation to the downside. Okay, so let's go ahead and open up a multi-pane and see if we can gauge a better edge or a deeper edge for the coming sessions. Okay, let's go ahead and load up the 30-minute. Come on, let's do it. Let's do it. Okay, there we go. So now for the new viewers, I'm going to go ahead and pull up the RSI properties. These RSI properties are actually 4 zones that I would like for you to hone in on as I talk. Okay, so here is the 30-minute time frame, and it is suggesting a continuation to the upside. But please notice that the RSI signal has actually been using the moving average as a form of resistance. Okay, another thing to notice, and a little hint that we may actually face a continuation to the downside apart from us using the moving average as a resistance, is the fact that we're in the very deep areas of the bear weakness percentile. Usually when we're in these deep areas, a gravitational pull back into the opposing zone is likely. Okay, so now the buy hourly is suggesting some sideways trading here. So this is a little neutral, if you want to call it that. Okay, so there is a suggestion from the moving average that there is a continuation to the upside. However, we are below it, okay, which is bearish. We can use now the moving average as a form of resistance before continuing on to the way down. The good thing behind this is that we're very much in the shallow areas of the bear weakness percentile, which usually means a gravitational pull into the following zone is likely. Okay, so now the 6-hour time frame is also suggesting some sideways trading. The only thing good that I see here is, again, that we're laying in the shallow areas of the bear weakness percentile, which usually means, again, a gravitational pull into the following zone. The following zone being bull weakness, okay? So now this is what's a little curious, is that the daily time frame is still suggesting a continuation onto the downside, and the downside is actually pretty much nosediving, okay? The moving average is now pivoted towards the downside and suggesting a continuation as such. Now, what can happen here? Now, the thing is that if we do continue on to the downside, there's the likelihood to where we can approach the deep areas of the bear weakness percentile, thus exposing us to a higher risk of diving straight into the bear strength percentile. Okay, so we do have to watch and practice utter patience with what's happening currently. The buy daily is still suggesting an aggressive downside. It has now made a bearish cross below the moving average, and it's now at the junction between the bear weakness and the bull weakness. Usually when we're coming from the opposing zone and we're at that junction, the likelihood of entering that prior zone is likely. Okay, so now we're not going to go into the 3-day and stuff, as that's going to be a little too far away. But yeah, so if we can just go ahead and touch bases one more time, we already saw the price action come back and tested that little tiny gap that we had here. So let's refer back to the daily chart and take a look at what we have. Okay, so if we looked at that, let's take the value of that touch, which I think was 623, maybe right around there. So 623, okay, and let's go ahead and make a trend line there and go back to the daily. Okay, so yes, it is very much in confluence with that little tiny gap that we had down there. Okay, so please notice as well that the $4.80 zone that we were talking about still has some correlation to where we could potentially land as to retest the newly converted resistance into support from the larger broadening descending wedge. Okay, so there is still downside to be looked at, and potentially some sideways trading while validating that newly converted resistance into support before a continuation onto the upside. Okay, so this is a little tricky. We definitely have to rely on some math and definitely have to rely on some raw price action and previous points of support and resistances so that they can assist us in understanding what's to come next. Okay, another thing to notice too is that the 50-day simple moving average has actually been used now as a form of support, since the price action came right down here at 623 after market. Okay, so there is that support right there that we still have to break. However, since we are sitting at about 623, the 100-day moving average is sitting at about 704, which could be a likely short-term bounce to the upside to about 704, and then we can continue on to the downside. Okay, so my overall target to the downside could actually land at about $4.76. Right around there, 470, 476, around there. But it would be to this tiny little gap. Okay, so if it does capitulate any further, that's out of panic sell and it's out of the playbook rules. So please consider those things. Okay, make sure to practice risk management. Okay, if you are interested in acquiring these indicators, these fine indicators that Crypstex developers have written, please get in touch with me. Send me an email, or the links will be in the description below. I will go ahead and give you the details as to how to acquire these indicators. Okay, and please know that the indicators are not part of any subscription-based packages that TradingView has to offer. This is entirely offered by a different author, which are retailers and authorized retailers of TradingView, within TradingView, to be better. To say it better. Okay, so yes, I think this is a pretty good place for me to leave off the video. Know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Okay, I need you to do your own DD and everything will be just fine, guys. Okay, so please refer to those links down below. Start an account with TradingView so that you can get some indicators later on if you decide to do so. The link will be in the description below, and it'll actually help me continue my work by you signing up to TradingView. Okay, you guys, but with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.